The US and China have finally agreed to a trade deal. Trump wrote in a post on Truth Social, and I quote, "Our deal with China is done, subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied upfront by China. Likewise, we will provide to China what was agreed to, including Chinese students using our colleges and universities. We are getting a total of 55% tariffs. China is getting 10%. So this is the quote that was put up by Donald Trump in a post on Truth Social. What does it mean for both the countries going forward? I have Manish Singh, CFA and Chief Investment Officer at Crossbridge Capital, now joining me on the phone line with more. Manish, thanks so much for joining us this evening. Quick, and first up, what impact do you foresee the new US-China deal, especially China's commitment to supply rare earth and magnets, having on global supply chains and technology sectors?
Good evening. My view will be that, of course, any de-escalation on the tariff front is a welcome news. But if you're looking for the direction of the equity market, then we have to look at other factors as well. So we got the CPI number today, which was weak. If you look at the core CPI, and prior to this, you will recall that we had the PCE number, which is the data that the Fed looks at when it thinks about interest rate, and those data were also weak. So if you put the CPI and the PCE plus the de-escalation that we are seeing between US and China on the tariff side, it just tells you that you have a much softer data ahead if the tariff remains, and that is going to push Fed to cut rates. And that should be seen as a welcome news. And also, remember, a lot of the inflation expectations are based on US and China not agreeing a deal or having more tariff settled between them. And if those things don't come to pass, which it looks like it won't, given the post that President Trump has made, that should be seen as a very positive and welcome news.
So given your experience, managing multi-asset portfolios, then how do you think that investors should position themselves in light of this agreement and the potential for shifting tariffs between the US and China?
I would say you have to be long the equities, and which is going to be good news for equity assets. It's going to be good for risk assets. So you can be long equity, you could be long bonds as well, because if the rates are going to come down, then clearly you're going to benefit on the bond side. In general, we have to interpret this as a risk-on scenario, and that is how I would interpret this data as.
Right, Manish Singh, thank you so much for that very, very comprehensive insight, coming in as Donald Trump has now claimed that the US and China have finalized a deal.